Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications. The US stock market is at a very interesting point right now. The S&P 500 just hit a new record high, but futures are pulling back slightly. All eyes are on the PCE inflation data coming out this Friday, which will be the key to the Fed's decision on a September rate cut. What's more, Fed Governor Christopher Waller has just publicly supported a rate cut, citing risks in the labor market. Meanwhile, Morgan Stanley thinks a cut is far from certain due to 4 conflicting economic factors. We also can't miss the individual stock movements after hours, like Dell, which had good numbers but a disappointing outlook, Autodesk jumping 10%, or Nvidia, which remained a focus even if it wasn't as spectacular as expected. Today, we're going to break down all these perspectives from an investor's point of view in a clear and easy-to-understand way.
JOYUP Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours.
We have 2 big pieces of news to watch. First, the U.S. stock market continues its upward trend. Yesterday, the S&P 500 reached a new record high of 6,501.86 points, confirming that investor confidence remains strong. The Nasdaq Composite also rose 0.5% to 21,705.16 points, and the Dow Jones went up 0.2% to 45,636.90 points. The main reason for this continued high is that the U.S. Q2 GDP, or gross domestic product, was revised higher. This means the American economy is stronger than previously thought, which is great news for investors, as it shows the economic foundation is solid. However, here's the interesting part. Even though the market closed in positive territory, futures trading after hours saw a slight dip. S&P 500 futures went down to 6,514.75 points, Nasdaq 100 futures fell 0.1%, and Dow futures also dropped 0.1%. The recent futures are looking a bit sluggish is that investors are waiting for something big. The July Personal Consumption Expenditures, or PCE data, which will be released this Friday. The Fed, or the U.S. Central Bank, uses PCE as its main inflation gauge to decide on interest rates. Analysts expect the headline PCE to stay at 2.6%, but the concerning part is the core PCE, which excludes food and energy. It's expected to rise to 2.9% from 2.8% the previous month. This would be the highest level in 5 months and, crucially, still clearly above the Fed's 2% target. For investors, this PCE data is a real game changer. If the numbers come out higher than expected, especially if core PCE jumps past 2.9%, we might see investors take profits on stocks that have risen a lot. That's because it would signal that the Fed might have to keep interest rates high for longer, which would affect stock valuations, especially for high PE tech stocks. On the other hand, if the PCE numbers are better than expected, or even just meet expectations, it could be a good time to increase your stock positions. This would open the door for a Fed rate cut, which would lower the cost of capital for companies and make stocks look more attractive compared to bonds.
On the flip side, yesterday, Christopher Waller, a Fed governor, publicly supported a 0.25% or 25 basis points rate cut in September. His reason? He said the labor market is starting to weaken. Private sector job growth has slowed to a level of stagnation, and wages for people changing jobs are now lower than for those staying in their current roles. This is a sign that the labor market isn't as robust as it used to be. Waller warned that the Fed shouldn't wait until the labor market severely deteriorates before cutting rates, because it might be too late. He stated that the risk of a rapid worsening of the situation is increasing. From an investor's perspective, Waller's words are a significant signal. He is a voting member of the FOMC, the Monetary Policy Committee. His clear support shows there's internal pressure within the Fed to cut rates, especially as labor market data begins to show signs of weakness. Interestingly, Waller emphasized risk management, which means the Fed shouldn't wait for the economy to be in full-blown trouble before acting. This is a shift from their past, more hawkish stance. For investors, this could be a sign that the Fed is becoming more dovish or pro-economic growth. However, Morgan Stanley remains unconvinced, warning that the odds might be 50-50 because several economic indicators are still very strong. GDP is growing at over 5%, the unemployment rate is holding steady at 4.2%, and retail sales continue to exceed expectations. This suggests the economy doesn't need a huge stimulus.
Let's take a look at some individual stocks. The star of yesterday was Nvidia, which many people were waiting for. The results were good but not spectacular, with the stock down 0.8% and flat in after-hours trading, showing that investors had higher expectations. For stocks that moved after the market closed, Dell Technologies fell 4% despite strong Q2 earnings. The disappointing outlook for the next quarter was the issue, as Dell projected Q3 earnings per share of $2.45, lower than the analyst consensus of $2.55. On the other hand, Autodesk jumped 10% after its Q2 revenue grew 17%, beating expectations. The popular fashion stock Gap dropped 8%, even though its earnings per share were slightly better than expected. Marvell Technology, a chip partner of Amazon, fell 8% after providing a Q3 revenue outlook of $2.06 billion, lower than the expected $2.1 billion. Meanwhile, Affirm Holdings, an online loan provider, rose 3% after its revenue of $876.42 million beat the forecast of $834.35 million. Ulta Beauty, the well-known cosmetics store, jumped 7% after its same-store sales increased by 6.7%, and it provided a full-year revenue forecast higher than what analysts were expecting. And the star of the night was Ambarella, a tech stock that surged 20% after its revenue of $95.5 million beat the $90 million forecast.
In a nutshell, the market is currently in a wait-and-see mode. Investors are confident in the economic fundamentals, but are also cautious about inflation, which hasn't yet reached the Fed's target. Therefore, the release of the PCE data this Friday is a critical turning point that will set the market's direction for the rest of the year. For retail investors, I recommend watching the PCE data closely on Friday. If the number comes out higher than expected, it might be a short-term headwind for the market. But if it's better than expected, it could be a catalyst for the market to move higher. Remember, investing in stocks is a long-term game. Don't panic over short-term volatility, and be sure to diversify your portfolio properly. Use this kind of good information to help you make decisions, but don't use it as the sole basis for your choices. And I'd like to thank investing.com for all the great information today. Now, let's take a look at the individual stock prices related to today's news. In this segment, I'll provide a live daily analysis of stock prices for you, brought to you by JOYUP Forecast.
Let's start with the first one, Affirm Holdings AFRM. This stock is in the hot fintech sector with its buy now, pay later service that many of you are probably familiar with. If we look at the price chart since 2022, you'll see that AFRM is forming a rising wedge, or a staircase that is getting progressively narrower. The lower trend line, or support, is quite strong, gradually climbing from the $10 to $15 range to $40. The upper resistance also surged from $40 to $100. Right now, AFRM's price is getting squeezed closer to the wedge's peak and has started a slight correction. Buying momentum seems to be tapering off, but indicators are still in the positive zone for the long term.
I believe AFRM has a high chance of a breakout and could surge to $100 to $110 if there's an increase in buying volume to support it. However, if the price drops below the support at $75 to $80, it might pull back to the $60 to $65 range. Next up is the semiconductor stock focused on AI and video processing technology, Ambarella, AMBA. This stock has a bit of a concerning story. Over the past 3 to 4 years, the AMBA chart has formed a descending triangle, which is a clear sign of a downtrend. We can see that the price has been making lower highs from $100 down to the $80 to $85 range, while the lower support at the $45 to $50 level has remained strong. The current price is $70.63 and is beginning to decline, which is a point to watch closely. The momentum from the MACD seems to be weakening, but the RSI is still at a neutral level. In the medium to long term, this stock is in a waiting game for a major move. If the price can surge past $85 with high volume, there might be a chance to retest the $95 to $100 level. But if it falls below the support at $45, it could see a sharp correction down to $35 to $40. Next up is the semiconductor stock focused on AI and video processing technology, Ambarella, AMBA. This stock has a bit of a concerning story. Over the past 3 to 4 years, the AMBA chart has formed a descending triangle, which is a clear sign of a downtrend. We can see that the price has been making lower highs from $100 down to the $80 to $85 range, while the lower support at the $45 to $50 level has remained strong. The current price is $70.63 and is beginning to decline, which is a point to watch closely. The momentum from the MACD seems to be weakening, but the RSI is still at a neutral level. In the medium to long term, this stock is in a waiting game for a major move. If the price can surge past $85 with high volume, there might be a chance to retest the $95 to $100 level. But if it falls below the support at $45, it could see a sharp correction down to $35 to $40.
Let's look at another impressive long-term semiconductor stock, Marvell Technology, MRVL. What's interesting is that if we look at the chart since 2001, we can see it formed a massive ascending triangle over more than 20 years. The main resistance was at $70 to $80, a level the price tried to break through multiple times. It finally had a breakout in 2021-2024, surging to new highs of $120 to $140. The current price is $77.23, which is a correction after its rapid growth. The MACD momentum is in a correction phase, but is still in the positive zone, and the RSI is at a neutral level. In the long term, I believe MRVL is in a consolidation phase before its next move. The key support is at $65 to $70. If it can hold this level, it has a chance to retest $90 to $100 in the medium term.
Next is the familiar apparel retail stock, Gap Inc. This stock has been moving sideways in a range for a long time. Looking at the chart since 2017, you'll see Gap's price has been trading within a $10 to $35 range. The upper resistance is at $30 to $32, and the lower support is at $8 to $12. The current price is $21.68, which is right in the middle of this range. The MACD momentum shows a lack of clear direction, and the RSI is at a neutral level. In the long term, I believe Gap will remain in this range trading structure and needs a strong catalyst to break out. If the price breaks above $32 with high volume, it could rise to $38 to $40. But if it breaks below the support at $18, it might test the next support level at $15 to $16.
Let's wrap up with the surprisingly fast-growing tech stock, Dell Technologies, DELL. Looking at the chart since 2020, we can see it formed a beautiful ascending triangle. Especially in 2023-2024, the price had an incredible breakout from the $40-50 level, surging to $180. The current price is $134.05, which shows it's maintaining its upward momentum very well. If we draw trend lines from the highs and lows, we can see a converging pattern forming, which is a very interesting signal. The MACD momentum is recovering after a correction, and the RSI still has room to grow. All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.